I feel like I've been playing business on hard mode.
When the ending is unknown and the distance is unknown, that's when you know who the f*** you are. Stay hard.
Here's what I mean by that. I bought a business back in January of this year. That is the carpet and steam cleaning business that is currently losing money. And that's where it starts to get a little difficult. It's losing money. I bought this thing thinking that I wasn't going to spend a bunch of time on it. It'd be more of a semi-passive investment. I would hire an operator. They'd take over the day-to-day operations, and then I would focus on maybe some high-level strategy things, while during the day I'd be focusing on my own career as a legal professional, and nowadays that would be running my own law firm. At the time when I bought this business, I was working in big law. And right now I think the biggest opportunity in front of me is scaling my legal practice and bringing on associates, bringing on staff to try and scale this law firm. And that's going to take a lot of work. There's a lot of things that I'm already working on in hiring people, setting up processes, and getting things ready to go, and continuing to scale the actual amount of billable hours that we're bringing in and that I'm serving personally right now, but I'm trying to bring on help to help serve those hours. But I feel like I'm playing this game on hard mode because while I'm trying to do all that stuff with the law firm here, over there I have this steam cleaning business that is losing money that I have to put money into to keep it operating and to keep making payroll and all that great stuff and making sure that it doesn't go completely to zero as we try to turn things around. But at the same time, I have all these things that I want to work on, and I have to take the money that I'm earning on the legal side, at least some of it, and shifting it over to the carpet cleaning side. So it feels a lot like an extra tax that I have to pay. And that tax goes to pay at least the somewhat misguided decisions that I made over the past many months. Though to be fair, even if this tax was removed, business is still hard to get right. It's easy in principle, but it's hard in execution, and that's just the nature of the game. I'm just adding a little bit of extra difficulty on top of that. I'll talk about my plans for the steam cleaning business going forward, but otherwise the legal side of things has been going quite well, and I'm in the middle of trying to hire for a few positions there. One of those being an intake manager who would manage the actual client intake process, so that when someone calls the firm, they're going to talk with someone in the intake department who will kind of screen them to make sure that they'd be a good fit for our practice, and if they are, then they move down that process, trying to get them to sign an engagement letter so we can begin providing our services to them. I'm struggling personally to handle my ongoing intake while also trying to serve my existing clients, so I really want to solve that bottleneck right away. And that would give me a lot more capacity to expand, since I could then run more ads, could bring in more leads, and we can actually handle those leads. And then we'd have to get those new clients served, so that's where I could look to hire an associate or a law clerk or more help on the actual fulfillment side. And I'll definitely be documenting a lot of that process here on the channel, so subscribe if you're interested. But otherwise, let's go ahead and get into this month's net worth numbers. For those of you who are new to the series, I put out an update about my net worth and financial situation every single month as I attempt to reach a $1 million net worth and a passive income of $30,000 per year, and trying to do all this before I'm 30. Right now I'm 26. The numbers are a little bit arbitrary, but the whole idea is I'm trying to reach financial independence, and during that process, I'm trying to document what I'm doing, what might be working, what might not be working, and I put out this update every single month. So if you're interested in following along, then be sure to subscribe. As a reminder, last month our net worth was $131,000 and some change. As always, let's start with the good stuff, the assets. Our cash situation remains precarious because I still have not finished my rental property sale for this Indianapolis rental property. This deal just keeps dragging out more and more. This is the second buyer we've had, and it's gone on for months now. This is not a very expensive property. It is not like it's in a horrendous condition or anything like that, but for some reason, just, I don't know if it's luck of the draw or whatever, it just continues to drag on. I'm very optimistic that things will sell in the next week, or that things will actually close, since we technically have a clear to close, but that's not the first time I've heard that, so we'll see what happens. And I'm also supposed to be getting this business loan returned to me very soon, and that would be a large liquidity event relative to my current balance sheet. I thought that I was going to get both the loan back and the property sold in this previous month, and even to some extent the month before that, but that has not happened, and we'll see if that actually happens this month, and that would allow me to get a bunch of cash, nearly $200,000 in cash, to then use towards a lot of other things, mainly debt pay down, and also towards reinvesting into my law business and potentially into the steam cleaning business as well. And speaking of those businesses, you might notice the change here that I've made to the business valuations. If you're following along on the previous episodes, I had the steam cleaning business valued at $180,000. It's probably worth quite a bit less than that based on last year's numbers, or this last year since I've owned it, since we haven't made money. So it's been pretty rough. So really, this value, it kind of depends on what you're looking at. Are you looking at multiple years of history? Are you looking at just 1 year? Are you looking at the equipment value? So anyways, I'm just starting to kind of write down the value to be a bit more conservative here. And to kind of counterbalance some of that, I'm doing a little engineering here. I added the Duffley Law. So this is my law firm. I added that, the equity in the business there. I'm not really planning on selling it, but the firm itself has value. It's producing income on a monthly basis at a pretty consistent level already, and I have a lot of abilities to scale that, or at least I think I do, and I'm pretty confident in that, and that's why I'm starting to hire people. So really, I'll try to keep some sort of a vague valuation there, somewhere probably in the ballpark of a half times annual revenue or something like that. I've really only been operating in earnest for a few months where I've actually been running ads and trying to scale this thing, but I do want to reflect some sort of value here for the Duffley Law equity, even though, again, I'm not really planning on selling it, but I do envision this becoming probably my most significant asset, at least for quite a while if things go well. In the coming months, you'll probably see me tick up the balance of the Duffley Law equity while ticking down the balance of the steam cleaning business, but that's not a guarantee. It'll kind of depend on what's happening. While I'm talking about the law firm, I'll note this legal fees item down here, since that is uncollected legal fees. A lot of this I haven't even sent out the bill for yet. I collect some of my income during the month, but a lot of it I send out on a monthly basis, just kind of depending on what the arrangement is. I don't actually use retainers at the moment, but I will be very soon. I'm getting my trust account and stuff set up. A lot of stuff is done on flat fees that I bring up front. Some of it is done at closing with a real estate deal, for example. I might actually get paid at the closing table, so the risk is mitigated on a lot of this collections. And a lot of these fees are for people I've already worked with in the past and have paid me for previous things, so that mitigates some of the risk there too. But the great news is, even with all the things that I'm working on, I still am able to bill over 6 figures a year in legal fees if I'm able to continue this pace, which I should be able to since I'm not putting all of my time into the law firm right now. And if I was, I imagine I could bill a lot more. A lot of my time towards the law firm right now isn't even being spent on billables, but rather is being spent on interviews and trying to set up the processes to make the billable process and make the actual legal fulfillment side a lot more efficient. For example, if I can have someone else take care of intake, that's probably more clients I can bring on, and it's less time that I personally have to spend on onboarding and instead can spend on actually doing legal billable work. Or alternatively, it's more time I can spend on hiring other people to do more of that billable work. And at that point, my job really would be running the law firm rather than just doing billable work. We shall see how the hiring goes. Otherwise, on the asset side, the only other significant change here is down in my retirement funds. I rolled over my previous employer's 401k into an IRA. This is a traditional IRA. I may end up actually rolling that into a Roth or converting it into a Roth. I'm talking with my accountant about that right now and what might make sense, since I have some business losses here and that's going to lower what I thought my tax bill might have been. So I'm weighing my options right now, but I now have control over what these funds are invested in rather than having it stuck in an employer-sponsored account, although I had some pretty decent discretion on what funds I could use there too. All told, that leaves me with just shy of $1.27 million in assets. And now onto liabilities. Like the previous handful of months, you're not going to see a whole lot of changes here. The really only major development here is that the student loans are now accruing interest again, and we have to start making payments now, although we're on kind of a graduated payment plan for those. I have to say I'm a little bit surprised we didn't see another wave of the magic wand from the government to find some way to delay the payments even further. But hey, we're here. I enjoyed the invisible helicopter money while it lasted. But now we're finally starting to pay for my wife's graduate program all these many months later. But our balance on the loans actually increased a little bit from the previous month despite the payment, so we'll see if that actually continues. Because it's the graduated plan, there might be quite some time where the minimum payment doesn't actually cover the interest accrued, which isn't really a problem because we have much higher interest loans to worry about in the meantime, so it's not such a bad thing that that is accruing interest when we can instead use that money to pay down much higher interest debt. And speaking of debt pay down, here is the summary for last month. I'm trying to reach $200,000 in cumulative debt pay down by the end of this year. It's going to be pretty close whether or not we get there. It depends on how much money from the property sale and the loan return that I then will throw into all of these loans or some of these loans. But regardless, really just made minimum payments this month, and you'll note the student loan negative number down here, and that's because the balance actually increased. So it's sort of like negative pay down, or in other words, interest accrual. But either way, we're still able to pay off close to $3,000 in principal between all the loans. loans from last month. That's just making minimum payments. So that brings our total cumulative debt pay down for the year up to over $61,000, almost $62,000. And after factoring in that debt pay down, that leaves us with just over $1.134 million in liabilities, which means our net worth has increased to just shy of $135,000, which is an increase of a little over $3,000 from the last month. Our debt ratio is 89.38%, and our passive income remains at about $600 per month. So it was another positive month all told. Now, I mentioned I was going to talk about my plans for the steam cleaning business because I am trying to make some moves there. About a week ago, I had a conversation with Mike Sharp over on the Punch Card Investing channel. We talked about business struggles since both of us run businesses that have been through some hard times recently, mine being the steam cleaning business that I talk about on this channel. And there's definitely a lot of work that needs to be done. And I was trying to figure out what to do there because I really want to focus on the law firm side of things. That's where I see my biggest opportunity. It's a business that I very much understand, or at least think I understand. It's definitely one I'm more experienced with and I'm more comfortable with than the steam cleaning side because it's something I've actually worked in for quite some time now. But I'm not at the point where I want to sell the business because I at least see some sort of path to profitability again if we can figure out the marketing side, continuing to produce over there, creating new ad copy, creating new materials to use for advertising, also packaging things and upselling a lot more aggressively than we currently are. But it's just going to take a lot of effort to do that. And it's effort that I am not personally willing to expend because I'm trying to put that effort towards the law firm side. And in talking with Mike about this problem, by the way, you can check out our conversation that we had on Punch Card Investing in the link above. And some of this was taken offline. It wasn't just on the show, but a lot of what we talked about was on the show. And he suggested something to me about just finding a manager who can actually take over everything and would get some equity in the business if they reach some milestones, incentivized like an owner, properly like an owner. And that could be a more effective way to try and get the business back in a better place and pass on some of the responsibilities that I technically should be doing, but just don't really have the time or the willingness to do them. Because even though I have a general manager for this business, technically speaking, he's quite part-time, and part of that's because what I thought we were bargaining for is quite a bit different than what we actually got. Sales are just much lower across the board, and we never got to the point that we thought we would, to where the general manager would really take over everything day to day. But given the situation we're in now, I'd rather find someone who is experienced, entrepreneurial, is willing to take a risk here to try and turn this business around. I'll keep sustaining any losses that are going on for at least a while, and if all goes well, then that person would get rewarded with a significant chunk of equity in the business, and then we can decide what to do from there if things are really going well, whether we want to continue just holding, try and sell it to someone else to just get out of it completely. But it's a lot easier to do that when the business is actually in a strong spot. But most of all, give me a lot more freedom to work on the thing that I think is going to be my biggest opportunity vehicle in the coming years. So I'm trying to hire for that position right now, and I've come across some decent candidates that I'm talking with, and potentially going to get a headhunter involved here too in the event that one of these candidates doesn't go through, but we'll see what happens. But I definitely want to get this hire right because this is a very important position. They'll effectively be the captain of the ship. They will determine what happens for the most part going forward. And sure, I'll have some input as the owner, but I'm going to try to let them have a pretty long leash, assuming they are experienced in the industry or at least in home services, because it is a home service business. But ideally, I want someone who's been there, done that with running a home services business profitably. I have learned a good bit about hiring over the last year about what to do and what not to do, red flags to avoid, and things like that. So it should make this process more effective than it might have been 10 or 12 months ago when I didn't have that same experience. But a lot remains to be seen, so we'll see what happens. And maybe I can switch from playing business on hard mode to less hard mode, or something like that. In any case, if you enjoyed this video, then definitely subscribe so you don't miss future episodes. Like I said, I put out a new episode of this series every single month. As always, thank you for watching.